Hey, what's going on? It's Scott Taylor with SanDiegoRealEstateHunter.com, licensed in the state of California to do both real estate and mortgages with an emphasis on San Diego. Now, you're here because you filled out a form looking for more information regarding FHA mortgages, and that's what this educational video is all about. Now, this will be a Q&A. There's another video probably on this page or via email or social media, wherever you're getting this. There's another video that talked about the FHA mortgage on a purchase itself. And this is more of a Q&A of things that I've gotten. And again, if you're just looking for the rate, go to bankrate.com and you'll see what an FHA mortgage rate is today. But guess what? That's probably not going to be your rate. You won't have that credit score that you need, or debt to income ratio, or purchase price, or make that loan amount, or maybe it's a different zip code because it's different, whatever it is. That's why I like to do these educational videos, just so you have a better idea. So let me jump into some of the questions that people have asked that maybe you might have, and I'll do my best to kind of simplify and streamline it in about 5 or 6 minutes. Now, Scott, talk to me, why would I go FHA mortgage, because I've heard bad things about it, versus conventional, okay? So for some reason, and it's not as much now, although I've been doing this since 2001, it's not as much now, but sometimes there's this stigma with FHA that you're going FHA because you can't go conventional, or you're going FHA for some reason. And that's really not true. You go FHA for a lot of reasons. There could be qualification reasons why. Maybe you had a short sale or foreclosure before, and you could get into a place faster if you went FHA mortgage versus if you went conventional. Maybe you're having some debt to income ratio things, like I don't think, or I've tried to get us to go conventional, but because of debt to income ratio stuff, we were maybe maxed out at 43% or 45 or 47. But maybe if we go FHA, we're not maxed out there. Like maybe we're gonna be maxed out at 50 or 53 or 55. So that might be a different thing. You know, down payment, if you stick with FHA, it's 3.5% down. Okay, and we can do that not just up to the conforming loan limit of 424,100 in San Diego. We can actually do that all the way up to 649,750. So realistically, you could buy a place for, and I don't have the number off the top of my head, I should, for 670 or 675 or 680. Put down 3.5%. As long as you're no more than that 649,750, you only put down 3.5%. So that's a great idea. Another reason, not to get off on a tangent, is maybe you're buying it, and when you're buying it, we're going to work closing costs into your rate, called a lender rebate or lender credit. We're doing that because maybe you don't have the money, and maybe how the offer was structured, the seller's not paying it, right? So, and then your rate's a little bit higher. And then maybe in 6 or 7 or 8 months, as soon as you can, you do an FHA streamline refinance, right? That would be something good to do, and you could drop your rate and you can work all costs into the loan. So maybe, or I'm sorry, into the rate. So maybe that would make sense. Another thing, right, especially in areas like San Diego, or in areas where there's low inventory and you need to buy a place, and maybe it's not the place that it's fixed up that you want. So maybe a thought process, and if we talked about it, this would be a thought process that goes through my mind that I coach people on, is getting a construction loan at the start probably won't be possible, okay? But one strategy you could use is buy FHA now. Then, as soon as you close, you can possibly do a refinance within 6 consecutive payments, or 210 days. They usually both go hand in hand. So, during those next several months, and there's a loan called an FHA 203K construction loan. So during those next few months, right, you get everything ready. You get the architect together, you get the permits, you get the contractor, you get bids, you get everything in line. We chat about it, we get your loan application done, we have all documents sitting there ready, right? And then as soon as we can, you can do an FHA 203K construction loan as a refi, and all those costs, as long as it fits into the loan and the structure, now you can fix up your place. And guess what? It's not a true construction loan. Your rate's going to be in the 4s or 5s. It's a very, very cheap thing to do. So that would be something that you would do. There's another question, Scott. Maybe talk about closing costs on an FHA, or how do we structure closing costs in FHA. So this isn't just for an FHA, by the way, but this is how I always look at stuff. There's really 4 ways to pay for closing costs. Either you pay them out of pocket, you get what's called a lender rebate. You qualify at one rate. We do your rate a little bit higher. There's a difference. That difference covers closing costs, called a lender rebate or spread. There's several different words. Another way is on your offer, right? So you might ask the seller to pay for it. Hey seller, I'm buying this home for $650,000 in Santee. If you accept this offer, we want you to cover X% of closing costs. And by the way, as of this video for an FHA, you can get up to 6% of closing costs covered if there are that much. Maybe you're also buying down the rate. So that's something that you could do. And then the other way, of course, to get closing costs covered, out-of-pocket seller lender rebate would be if you had some kind of grant or loan. So really those are the only 4 ways that you can do it. Okay, cool. So another question is, hey, talk to us about the different loan limits, because I get kind of confused. So we always have the conforming loan limit. For San Diego, it's 424-100. From that to the super conforming, or for an FHA high balance, it's 424-101 to 649-750. So as long as your loan amount, not purchase price, is below those, you're golden. Okay. Now you can't go above that. You can, but then you'd go into a jumbo loan. So simplified, FHA, just think, okay, I can go up to 649-750 loan amount. Okay. Another question is, and I love this one because this is a strategy that I like to talk to people about, is can I use an FHA on a 1, 2, 3, 4 unit? Yes. So here's the crazy thing. Okay. You could use an FHA mortgage, 3.5% down for a 1 unit up to 649-750. Now, I don't have these off the top of my head because these changed recently, but a 2 unit is, I don't know, something around 800,000. So you can put down 3.5% on a 2 unit or a duplex up to that loan amount, which is, I don't know, something around 800,000. A 3 unit, put down 3% and it's something in the 900,000s, right? And a 4 unit, put down 3.5%, you can go up to 1.2 something million. So think about this. This is a strategy that I'm talking to a lot of people about. Those fix and flips and foreclosures and short sales, they're not in San Diego right now. I'll be honest. If you find them, great. They're few and far between. Don't focus on that necessarily unless you want to do FHA to 203K construction loan. One great strategy is why not go FHA on a 2, 3, or 4 unit as long as you qualify, put down the 3.5% down, live in 1 unit, and rent out the other units. I mean, think about that. You can rent out, if you have a 2 unit, you rent out the other one. If you have a 3 unit, you rent out 2. If you have a 4 unit, you live in 1, you can rent out the other ones. You can get rent coming in. It may or may not cover your total mortgage. It all depends. And then you have all that appreciation and you get all that tax write-off, all for 3.5% down. And if and when we structure it correctly, all closing costs are either worked into the rate or we get the seller to pay for it. I mean, think about that. You could buy a $1 million fourplex for $35,000 down. That's it. And your interest rate, and again, depending when you watch this, is someplace in the 4s or 5s. I mean, that's nothing. It's crazy. Cool. So you've been watching these videos, you watch this video, and you want to get started. So you go to scottsloanapp.com, you fill out an application in 20 minutes or less. Once you're done, I get an email or text alert. I'll run your credit. You don't pay for it. I do. I'll call you up and say, awesome, based off your application, based off your credit debts, based off your credit score, it looks good. I'll send you a list of the documents that you need. Tax returns, W-2s, bank statements, paychecks, 401k statements. If you had a Chapter 7 or 13 or whatever's on your credit report, you'd upload it via my website or send it to me via email. As soon as we get it, my team processes it as fast as possible. Then because we are a brokerage, we can take it to any wholesale lender that we're approved with in California. And there's a lot. There's a lot of great programs. So we can get this. I'm assuming that you're doing a purchase. That's why you're watching this video. We can do this purchase for sure in 30 days or less. A lot of times, super, super quick. So once again, go to scottsloanapp.com to get started. Thank you so much for watching this video, and I hope to do your mortgage loan sometime soon.